Hello, my name is Cyndi Fling. I'm with Axiom Realty Group here in Brighton, Colorado. I recently talked to one of our lenders and asked her to answer some of the most commonly asked questions that we get from a lot of our buyers. If you've been thinking about buying a new home, you're going to want to stick around for this video. Hello, thank you for joining me today. Can you tell us a little bit about yourself, who you are, where you work, and what you do for your company?
Absolutely. Thank you, Cyndi. I appreciate the opportunity to do this with you. I'm Kim Hajek, and I am a home loan advisor with BOK Financial Mortgage. My company, BOK Financial's roots started in 1910 as a regional resource of capital for the energy industry. We started in Tulsa, Oklahoma, so BOK, which is Bank of Oklahoma, of course.
Okay.
That's how we began. I am going into my 17th year of being a home loan advisor. And my goal is to truly help my clients build a strategic plan as far as meeting their goals. And that could be with setting more focused around what they want as a monthly mortgage payment, their down payment, or their loan term. So basically starting that process and making sure we get the plan together is my focus with my clients.
Awesome. Well, you've done a lot of great things for a lot of our clients, so thank you for that. Some of our buyers and sellers have heard that they need to be pre-qualified or pre-approved before they can start the home buying process. Can you tell us the difference between being pre-qualified or pre-approved from your perspective?
Yes, so being pre-qualified basically means that they've completed a loan application. And based on the information that they have given, as far as their income, their assets for down payment, and maybe reserves, and where they're telling you potentially their credit score is, you are giving them an idea of what they can be pre-qualified for. Sometimes that includes doing an actual credit report, and sometimes it doesn't. So it just depends on company to company. We will give a pre-qualification once we've pulled credit, but we don't necessarily we would not be looking at their actual income documents and their asset documents.
Okay.
It would just be off the information they've given.
Great.
So a pre-approval goes deeper, basically, and is much more effective. And basically, really, as you know, what is wanted in our industry right now is a full pre-approval, meaning that not only have we pulled credit, we've looked at their pay stubs, we've done verifications of employment, we've reviewed how long they've been doing their current industry or working at their current employer. And then, of course, seeing their bank statements. Where's the money coming from?
Okay.
For down payment and or closing costs.
Wonderful. So a lot of aspects go into that. There is a lot of emphasis on your credit score when applying for a home loan, and we know that the guidelines change. But can you give us some basic information on what the minimum credit score you would need to see to successfully obtain a home loan?
Absolutely. So lenders are different, banks are different. As far as my clients and working with BOK Financial Mortgage, we need a minimum credit score of 640. However, there's caveats to that. If they are utilizing down payment assistance with a program like CHFA, Colorado Housing Finance Authority, we can go down to a 620 credit score. With certain loans, there are exceptions as well. Bottom line right now for my company is 620, but a much better loan and easier qualifying when it's a 640 or above.
Okay, great. And it's not just credit. You also talked about other things you would need. There are also parameters for job history, income, down payment. As of today's date, can you give us some basic information of what is required as far as job history, income, and down payment?
Yes. So, as far as job history, we do want to see that they have been either in the same job or in the same line of work history for the last 2 years.
Okay.
So, job part, of course, is very important. We do want to look to see that they do have that ability to repay the loan. So, that's important. And then, as far as income, it comes down to a debt to income ratio. They have to be within a certain debt to income ratio depending on the loan that they're qualifying for. And that differs based on the type of loan. So if it is FHA, Federal Housing Administration loan, that is going to be different. Sometimes we can go over a 50% debt to income with FHA. VA is even more lenient because it comes down to what we call residual income, the amount of income that's left after they pay any other liabilities. So their current house payment, their auto loans, credit cards, student loans, things that would come up on their credit report.
Okay.
And as far as a conventional loan, it is going to be based on their debt to income with their current liabilities and mortgage compared to the income as well. However, they're more stringent. So with that type of loan, we really like to keep them more about a 43% debt to income ratio, but can sometimes go higher based on how strong they are as a borrower.
Great. So basic explanation for debt to income is how much you make versus
Your how
how
much
much.
you make compared to how much you're paying out. So what your liabilities are that report on your credit report.
Perfect. All right. So if a buyer feels that they're ready to move forward and they are ready to speak to a lender, what can they expect from the process?
It's actually pretty simple. I think that there's a lot of people that are scared to start the process, but to start with, it's a conversation. And if they feel comfortable going to that next step, that would be doing a full loan application, which they can either do online with a secure online application. We can meet in person or we can do that over the phone. It's whatever they feel most comfortable with. So that gets that process started. Once we have a full loan application, then we start getting documents. So that's pay stubs, W-2s, potentially tax returns, along with bank statements for their assets.
Okay. So pretty basic information to get them going. It's awesome.
Yep, absolutely. Very simple. And it depending on how many questions they have and information that they're looking for, we can get that done as fast as 20 minutes, or it could take a couple, about an hour or so. It takes longer if somebody's self-employed because we have to analyze those tax returns. And then depending on, if it's just one business or how they schedule or how they file their tax returns,
Right.
it can be a little bit more complicated, and that might take a day or two.
Okay. So still pretty quick
Yeah,
considering.
absolutely. Yeah. Yep,
Great.
absolutely.
All right. So after the potential buyer meets with the lender, provides you all the information requested that's necessary to get pre-approved, what are some things that you recommend they do or even not do while shopping for a home loan or even while waiting for the home that they have selected to close?
So the most important thing to do is to pay any of their monthly bills on time. Let the lender know, let me know if they have made any changes in their job. Let us know if there's any changes to their assets, if it's gone up or down. And what they do not want to do, very, very important, is they do not want to open any new credit. There's some tricky things out there like Amazon. We all love to shop on Amazon, and there's this little button you can click to do payment plans. Well, that is actually applying for an Amazon credit card. So very, very important that you are not opening any new accounts as you are going through the home loan process. If for any reason you have any thoughts to do so, contact me, contact your lender. Let's talk a little bit more about that to see if we can avoid you doing that.
I never thought about the Amazon thing, so that's good information.
We've
Something
had
you
a
wouldn't consider.
we've had a couple clients that have done that, and they're like, "No, I don't have new credit. I have a payment plan with Amazon." It's like, that's a credit card.
Oh no. Yeah, you don't want the incentive to get 50% off to mess up with your house.
Absolutely.
So yeah,
Yes.
it's good information. Great. So we've talked about the purchase process. Can our listeners also call you for refinancing as well? And is that process the same as buying a home?
Yeah, absolutely. I would be honored to help anybody look at refinancing and giving them the pros and cons. And, if it makes sense, if they're at a break even point with refinancing, and explain more about what that is. The process is very similar. We're going to start with a conversation to see what the goals and needs are. And then from there, if that's something they're comfortable with, we start the loan application. Exact same process and pretty much the same documentation. Can be a little bit more simplified when doing a refinance, depending on if they are just doing what we would call rate and term, not pulling cash out from their current equity.
Awesome. Great. Well, that's a lot of great information. Is there anything else you would like to add?
No, I would just say start early. If this is something that you're interested in doing, get that strategic plan in place, because you're going to be more educated and feel much more comfortable with the process when you know what you're capable and, more importantly, comfortable in doing.
Great. Great. Well, thank you so much, Kim. I appreciate this. Hopefully we'll be able to do another Zoom meeting or a YouTube video for more in-depth questions. But thank you so much. I appreciate it.
Well, thank you, Cyndi. I appreciate the opportunity to do this with you.
Thank you. Have a great day.
You too. Bye-bye.
Bye.
Thanks, Kim. I hope that helped answer some of the questions you may have had about getting a home loan. Keep checking back with us, because we'll be uploading more videos like this in the future. Also, if you've been thinking about buying or selling a home, give us a call. We'd love to help. Thanks for watching.